BTC.SX. And before we get started, we just want to give a little shout out to our TeamSpeak channel, which is basically like a Bitcoin trader Squawk box. It's very chaotic, a lot of price action calling. I'll leave the show notes for the server for that. And then, just right into it. We have both Joe, the CEO, and Josh, the Chief Marketing Officer of BTC.SX here. So, Joe, why don't I start with you? Just give a little, how did you get here to found? I'm assuming you founded BTC.SX, and what brought you into this space?
Thanks, Vic. First of all, I'd like to say it's great to be part of the show, and yeah, I'd love to be able to talk to the community and you guys and share our story. So where it first started for me was yes, back 3 years ago when I was working in finance. I was very much kind of working in technology, thinking, where's the next innovation going to be? Where's the next area of disruption? And as I was quite technical, my career has always been quite technical. I've always been quite enamored by all of the stories that have come out of Silicon Valley and the startup stories, and I've always very much aspired to kind of take the tech entrepreneur route. So come 2011, 2012, that's when Bitcoin came about, and I remember one week sitting there at work in a bank in Australia, and two of my colleagues separately, they knew my interest in technology and economics, and they separately sent me the same link on Bitcoin, and I vaguely remembered it was a Wired article on this new cryptocurrency called Bitcoin, and as soon as I opened the article, I was just absolutely sucked in for the next week, reading as much as I could about this groundbreaking technology. And when I first saw the white paper, I thought, this is absolutely beautiful. What it represents is the first time the Bayesian generals problem has been cracked, and being a computer scientist, I thought the solution was absolutely beautiful. So fast forward a year, after I bought my first Bitcoins at $2 a piece, I asked myself the question which a lot of people in the community tend to ask themselves after first acquiring their first Bitcoins, which is, what can we do with it next? And at the time, Mt. Gox had just set up shop, and they allowed people to essentially exchange their Bitcoins for cash. And so I just basically started trading on Mt. Gox, which was a wonderful experience, actually. So my claim to fame back in the space was, in 2011, was turning my $2 initial investment right up into $200,000 using various methods, which I'd be happy to talk more about later.
And you got those coins out before the big crash, correct?
A good amount of them.
Okay. All right, and then just turning to Josh, if you just want to give us a little quick summary of, I know you said you were new to the company, but in your short time there, what brought you there? I mean, you're new there, so what brought you there?
Yeah, okay, so I heard about Bitcoin April 2013. I think it was the Cyprus bull run that attracted me to Bitcoin. I heard about it on Reddit. I was interested straight away, did some more research and just continually learned more and more about it. I then, in January 2014, noticed a huge number of startups being formed, and there wasn't a lot of marketers in the industry. So I began offering freelance marketing support. That went well, and I kind of upscaled into a marketing agency. I then met BTC.SX at Inside Bitcoins in September 2014. We got chatting and stayed in contact after the conference, and on the 1st of November, I joined as Chief Marketing Officer.
All right. And, I guess we did this slightly backwards, but, most of our community is pretty familiar with the first layer of derivatives that we're starting to see come up around Bitcoin. So, what are the origins then of BTC.SX? How long have you guys been around? What companies do you guys exist in and such?
Sure. I guess to continue on with us where I left off in the journey of setting up BTC.SX. You know, when I was first trading on Mt. Gox, I kind of realized my first pitfall, which was the fact that it was incredibly difficult to trade there. I mean, coming from a background in financial services, I certainly knew that banks and such forth don't actually trade per se on exchanges. Exchanges are kind of similar to just basic money changers that you see in Chinatowns around the world. You go there with your one currency to buy the other currency. I mean, you don't stand there with a currency changer constantly switching between your pounds and your US dollars as and when the price moves. It struck me as a very impractical way of certainly speculatively trading or hedging, if you would want to call it that instead. So I guess I saw a big niche in the fact that just the trading space in general was very, very underrepresented. And I guess in late 2012, I got invited into the Mt. Gox office because I essentially held one of their largest trading accounts under my own name. I believe at that point I'd traded around about 5 million using various technical analysis trading bots and arbitrage bots as well that I ran. And you know, I was surprised, I guess, at the fact that you know, these 20-something-year-old kids had set up the world's largest multi-million-dollar exchange, and that had no financial services experience, prior financial services experience. And what struck me as surprising was the fact that I guess what's evident now is, without bashing them too hard, I guess it's the lack of fiduciary responsibility that they approach the business around. I went to their office, and you know, there were no formal kind of controls in place to protect different movements of money, and I kind of saw this with my own eyes and thought, wow, this space is really underrepresented. I know that there will be a huge opportunity for anyone who's had prior financial services experience to come into this space and essentially build any financial service which exists in the kind of fiat world for digital currency. So I guess after running my trading bots and taking quite a lot of profits out of that, I thought to myself, what can I do next? And I thought I'd love to be able to do something which instead of just made money for myself, you know, to serve the community instead. And what I thought I could do was, you know, change my trading bot into a trading engine. And I spent the next 9 months rewriting the trading bots into the trading engine, which formed the basis of BTC.SX. And since then, we've gone on to, I guess, incredible success and been able to serve, I guess, broker well over $50 million in transactions in the last 12 months alone. So sorry, I think that might slightly sidestep your question around kind of, you know, the different layers of financial services, but happy to talk about that as well.
Yeah, I mean, you came in, so I did follow a little bit of what BTC.SX was doing in the early days. I know initially you guys were partnered with Mt. Gox. Yep. Now moving forward, obviously we know that's you know, there was a halt in trading. I remember that kind of event, but now you guys are with Stamp and BFX currently.
And IBIT as well recently, yeah. So we went through a spree recently where we integrated a couple of exchanges, and that's great because it means from our business perspective it diversifies not only our but our clients' counterparty risk as well. So I'm quite proud of that. So the team certainly worked very, very hard in the last few months to do that. And yeah, I guess what we're seeing over the next, you know, especially across this year, is the diversification of the financial services that are setting up in this space. So first tranche of that, as you identified earlier, was the exchanges, and then it's going to be the trading platforms and derivatives side of things, which we're going to see grow in the years to come.
Hey, Joe. And
go ahead, flibbr.
I think, Joe, for those that don't know, can you just say exactly what BTC.SX is? Because it's not an exchange, and you said it's
Correct.
Made up from your bots. So how would you describe it? You know, in a few sentences. You know, where do you see it? If it's not an exchange, how does it fit in?
Sure. So I guess the most simplest description is to say it's essentially the IG index for Bitcoin, or I guess if you're in America, the E-Trade for Bitcoin, where you can log in and deposit your Bitcoins and trade on Bitcoin currency pairs. So that's the most basic description of what we do. It's a Bitcoin-only trading platform. And so, I mean, if you understand that exchanges are simply for exchanging money, then you'll understand that trading platforms are for going long and short without having to provide both currency pairs. And that's really the key differentiator in a trading platform as opposed to an exchange.
Okay.
Thanks.
Yeah, so and also, currently you offer, is it 10x leverage? Is that the standard, or can you go into that a little bit as far
Yes,
as what your offering is?
sure. When we first set up shop, we offered 10-to-1 leverage because that's what the market demanded. And we've now recently added 2-to-1 and 5-to-1 leverage, which enables our clients to, with different risk profiles, to open different size trades.
And then with that risk profile, many of us are familiar, I'd say probably most familiar with OKCoin's futures as well as 796, and they do a shared margin call loss system, which is, I mean, it's interesting. What do you guys do as far as risk management and margin calls and such like that?
So when I read about this, I only learned about this literally 2 weeks ago when the CoinDesk article came out. I was just standing there in disbelief because what the article outlines is the fact that a lot of these futures trading platforms were taking people's profits to pay for what we in the industry call slippage. And I mean, not once in the article did anyone ever mention the word slippage. Yet I was astounded to see them describe it as a technical difficulty, and I was just, yeah, I guess I was just in disbelief really, because anyone with more professional financial services experience would already account for slippage, and the fact that the markets do sometimes dry up in liquidity. So what they've done in recent days is, they've charged the extra insurance, which was basically to add an extra couple of percent onto the charge of the opening trade, and to use that to cover any potential losses. Now, at BTC.SX, we've always run a policy whereby our clients can never and will never lose more than their initial deposit, and that's a responsibility which I feel as if every single exchange from day one should have. And even when Mt. Gox went down and went out of business, it costed us a hell of a lot to cover our clients' positions, but we were proud of the fact that we could honor every single Satoshi which our clients, which we owed our clients as well. And so, the cost of our services represents the fact that we, in an open and transparent way, place trades directly out to market, and we cover the cost of any potential losses in any, unexpected margin call scenarios.
Yeah, I guess I have just a slightly different viewpoint of, I've always been accustomed to where the exchange or the trading platform stands behind, the losses of the trader to make good on the other side of the trade. But I do feel a little bit of comfort knowing that the shared margin system, I think, is a much more open and transparent way of going about kind of socializing those losses. And not that I want to go down that path at all. It's just in the Bitcoin exchange space, we definitely know there's been a lot of exchanges hiding losses, and then you have kind of like a systemic event. So with that being said, do you guys have any like VC capital backing, or did rounds of raising?
Yeah, we did. So we did a raise at the end of last year for 500 Bitcoins, and that was with Seedcoins Fund. And that was great because it enabled us to grow very, very quickly. But yeah, I mean, on that point of shared losses, I guess I'd I'd still like to dwell on that a little bit, because I guess the perspective that I come from, and the reason why we have certain controls within our own business, and you can see them quite transparently on our feeds page, is the fact that these losses should be controlled from the start. You shouldn't have to deal with them after the end result, which is a market movement, because at the end of the day, when you're in the business of trading, you should expect market movements to happen. To say it surprised you that the market movement occurred is not really excusable if you're running a trading platform. And I guess an extension to that as well, I guess for a start, you shouldn't be allowing a $7 million order to exist on your platform if you know that there isn't enough liquidity to back it. And now we have pretty tight controls on our maximum trade sizes because of this, because we would need to ensure that trading is not only done in a responsible way from the perspective of a trading platform, but we have to ensure the responsibility of traders on our platform as well. And now, I mean, some trading platforms are quite happy to allow these policies and allow people to, I guess, play out those fear and greed cycles, but certainly as the CEO of BTC.SX, I would not like to be encouraging those types of activities.
Okay, and I mean, just, on those same lines, I know flibbr, he can chime in here. I think he was the one that did most of the writing on some of the questions that we came up with. And it says that, can we only place 3 trades at once right now? And is there a 10,000 per trade limit? Is that some of the things that are still there, or are we talking about outdated stuff?
So we're in the process of, as an extension of our fiduciary responsibilities, we'd like to run our organization as close to a professional financial services organization as possible. In extension to that, I guess people shouldn't be too afraid to learn that we are looking to start introducing AML and KYC policies to better protect not only us, but our clients as well. At the end of the day, I don't want to encourage a kind of activity whereby we as an organization are effectively laundering money of questionable sources, I'll put it that way. And so, yeah, as soon as you sign up, I believe the initial limit is between 3 and 5 trades, and then simply once you add a name, I believe that limit increases right up until 12 trades. So, I mean, overall, you can place quite a lot of money into trades. I believe well over $50,000 to $100,000 worth of trades. But what we're seeing is, there's very, very few people who want to trade sizes of that much or more.
Okay.
Yeah, I mean, we have had instances of family offices signing up 2 or 3 accounts, and then, I mean, we have no problem with that as long as every member is fully verified.
Sure.
And so that's enabled them to place a hell of a lot more orders than the typical 3 on first sign up.
Well, that's
go ahead, flibbr.
I'm going to say, you just said a family officer signing up. Well, that ties in with basically the other thing that I was interested in was, who do you see as your actual customer base? I mean, are you looking for retail traders? Are you looking for institutional traders, or are you going down some other route,
Yeah, good question. I mean, at the minute, what we're seeing is the majority of our demand comes from retail traders. We'd love to work towards institutionalizing our platform, which we are doing at the moment. However, I guess it's a chicken and egg situation, right? Institutional money isn't going to come to play at this stage yet because of the regulatory stance of Bitcoin. I guess to that respect, Goldman Sachs literally can't play with Bitcoin because of regulation, not because platforms don't enable them to. And so, yeah, I guess we're on a route towards institutionalizing, but I guess it's more of a question of as and when the market allows us to do that.
All right, and like as we're kind of moving into this phase where we're going to bring up, as far as me and flibbr and many of the people on TeamSpeak and TradingView are pretty familiar with OKCoin's future system. So we were looking over your fees, and we see that there's currently a 0.6% trading fee. and a daily funding charge of 0.6%. Now, if before, how do you plan on staying competitive to, these other exchanges that are moving so fast in the space? When, I think, especially from my standpoint, flibbr can speak as well. This is probably one of our biggest hang-ups before. I had an account back in the Gox days, and I don't know if I'd really think about coming back until I saw something more competitive on the fee front.
Sure. So, I mean, recently, since Josh has joined the team, we've done a lot of community outreach pieces, and one form of feedback that we get all the time is, your fees are quite high. I'd love to trade more, but because I trust you guys and you run a great service, it's simple, it's easy to understand, it executes very, very fast. But the one thing is the fees are a little bit too high. It's very, very hard for me as a result to make a profit, especially when the market isn't moving as much as it used to. I mean, that's a fairly valid point that we took on board, and I guess today we were very, very proud to announce that with Black Friday. Happy Thanksgiving, by the way, everybody. That we've lowered our fees now to 0.48%, so that represents a discount of 20% on the open and closing of a trade, and we've taken our daily funding cost down 50%, right down to 0.3%. And so what that represents is a cost model that's a lot more in line with expectations. To that merit as well, I'd just like to share with the community a little bit of information of behind the scenes of our trading platform as to how we actually place these orders out to market, because I get a sense of feeling that once the community understands that, they'll honestly understand where our cost basis comes from. And so when you log into our platform and place a trade, what we actually do when you select the different exchanges is we actually, say for example, you're depositing 1 Bitcoin and you're taking a 10-to-1 leverage trade on, say, Bitfinex. You'll select the Bitfinex button, hit the buy or sell button, and we'd immediately literally go out to market and buy or sell those 10 corresponding Bitcoins. So what your fee covers is actually the fact that your order will get executed straight out to market as well, which is a really big selling point for us, because a lot of the other trading platforms, you'll be taking positions internally against other clients or against that exchange themselves or that trading platform themselves if they're backing that position. And so that's a really big thing for us to be able to say that every single one of our trades is placed directly out to market right at the very basis of the exchange. Is a very powerful statement to make as a trading platform. Although, having said that, there are the associated costs as well.
When I had a look on your exchange, I mean, I couldn't find any way of placing a limit order. Is it just market orders?
We have sell limit orders, but at the moment we don't have buy limit orders. So that's pretty challenging point which you've raised there, because it raises all sorts of questions, such as what the exchange will support as well. But we are looking into that, and so I guess all I can say is watch your space.
Yeah, but I mean those fees, even at 0.4%, I mean that's still high. I mean, if I've got the option of going to it for 0% or 0.4%, but it's not. I mean, if it's just a 0.4% on the trading, you'd be like, okay, fine. It's real money on the real exchange. Okay, fine. They have to cover the exchange fees, whatever. But if you say this holding fee as well, this daily funding charge, I mean, am I right in thinking if I take out a $100,000 order, you're going to charge me 0.3% a day on that as well?
Yes, so the way it works at the minute is the first 24 hours of the trade is free, but because it's a leverage charge and because essentially real money is moving around, yeah, we do have to charge for that.
I see, because on Bitfinex, I can loan out money, say 3x at probably 0.17, I'd say at the maximum, and on OKCoin maybe 0.1. So you're talking triple the rate there.
Yeah,
that's a lot. That's really expensive.
Yeah, those guys run great platforms, and I love what they're doing. But certainly for us, our business model is slightly different in the fact that we don't, when you're borrowing leveraged funds, you're borrowing them not out at the market, but directly from us. And so we like to have those cost bases covered, I guess, internally as best as possible.
Is that an inferior model, though? I mean, is it better to say, oh, you can loan the funds from the market where you can have more participants that can compete over offering the cheapest rate, like they do on Bitfinex? Is that a more superior model because it delivers more funds for, more capital then becomes available with competing rates?
Yeah, I mean, certainly it is another business model, but it depends how you want to place that trade out to market. So I mean, what's great about Bitfinex is that they've essentially made the entire thing an open marketplace. So you can take out a large swap if you'd like, and place that large order out to market if you'd like. But I guess I am conscious of the fact that there has been an occasion with a lot of triggered margin calls before. That is by no means a criticism of them because I believe their system behaved perfectly, but I certainly like the fact that for us we control not only the profit of every single customer, but the potential losses of every single customer as well.
Yeah, because if you're doing if you want to do a $100,000 order, I mean, if you've got a market buy, so you've just encountered a load of slippage anyway, then you've got the 0.4% on the trade. So you're hurting from that as well. Then you've got the 0.3% daily fee as well. So you need to actually be in a mood. You can't afford that market to stand still in a way.
Yeah, understood. Yeah, absolutely. And that's feedback which we've taken, a lot of feedback which we've taken from the community. And so I guess we have to balance those two. I guess balance the fact that as a business we need to cover our costs from one side. But from the other side, to that respect as well, we have to honour every single position which we place out to market and its associated costs. So I mean, it's absolutely a valid point, and it's something that we are constantly readdressing and looking at. But certainly helping our clients trade as profitably as possible is one thing that's always of a concern to us. Where we can help them profit, we will, where possible.
How does a margin call work then on your site? Say I put in, $10,000 and I leverage it, up to up to 100,000, and I place a trade and it starts going the other way. How does that margin call go? Is it? Will you explain it?
Yeah. So basically, one of the reasons why we put a maximum and minimum trade size is because it goes directly out to market, and so that in itself is a risk control mechanism to limit the maximum amount of slippage that a client would experience per position. I guess one of the other questions that's kind of related to that is why don't we display the order books, and that's because we find our execution prices usually very, very close to display prices. And so one mechanism which we use to control slippage in rapidly moving markets is the fact that every single order is for a large trader is a separate $10,000 order. Essentially, we're not dealing with, say, in OKCoin's case. Sorry, or was it BitVC? In their case,
OKCoin is our.
OKCoin, was it?
Yeah.
Sorry, there was a story in Coinbase which stated a $7 million order. I don't like to be pointing the finger at the wrong person. That might have been BitVC.
Oh yeah, that was BitVC, yeah.
Yeah, sorry. I guess apologies if anyone, if there are any fans of OKCoin out there or anyone from OKCoin out there. This was BitVC, so I guess their policy was, they had an unlimited size for orders. They placed a $7 million order. They allowed a client to place a $7 million order out to market, and I guess the profitable traders were the ones left hanging when they had to pay for it to cover the slippage. But for us, our trading engine controls slippage variables very, very closely, and when a position becomes very, very close to their limits, it will immediately liquidate that order with we price in an additional 15% slippage collateral just in case. So, under all scenarios where you would hit your stop price, if the order was to slip an additional 15% beyond that stop price, then BTC.SX will be left paying the additional slippage, the gap loss. and our clients would not lose out a cent.
Yeah, I mean, I kind of echo some of the, I don't know, just the same thoughts as Flibbr, because I'm sitting here, I'm trading on OKCoin, and you bring up a lot of valid points that I think are kind of missed on the surface, like the fact that you go out and you execute every order on exchange with, it's not a contract for difference. You're really going out there, so that definitely explains a lot of the cost associated with that model. But as an active trader, which is predominantly our community, it's still very hard to get behind if to be an active trader and be in the environment of the fees that you guys have. So I'm not really saying one way or the other. You guys know your clients better than we do, but from our community standpoint of being just active retail, I think it's a hard sell right now, to be honest.
Sure, absolutely. I mean, we've heard that mentioned before, and we certainly would love more feedback from the community out there. And so it's something that we're going to look into in a lot more detail. But certainly, what I'd say is, assess the risk profile that not only you as a trader are taking, but the exchange or trading platform as well is taking. Because I mean, the futures model is slightly different from our model as well, in the fact that an underlying trade doesn't necessarily get placed out to market. And so I guess there's a little bit of a question of morality as well, because certainly some of the traders out there just don't like the fact that there's no underlying order. It almost seems like the volume becomes synthetic then. And then there becomes a question of, from a moral standpoint, I know a lot of people in the community are quite opposed to fractional reserve banking systems. And in essence, I'm not out here to bash the way OKCoin or the other futures platforms do business, but some people are certainly like that reassurance that an underlying trade is placed out to market. I mean, there's certainly a huge amount of traders out there who are just very price agnostic, and that they see the absolute benefit in maximizing their profit, and they have the risk appetite which extends being able to, I guess take on board those risks and just be able to place trades at them at the cheapest venue possible. And I mean, I'm all for it. I mean, I've met the guys behind OKCoin. They're great guys. I believe it was Chris I met. And
I heard he did his UK tour.
Yeah, he came into our office and we spoke to him as well. And we had some very, very positive discussion around about, the ways that we could work together as businesses. But I mean, certainly, I guess as traders, and the message to the community is, I guess, do your research and be comfortable trading where you're trading, but be conscious of, I guess, the real price you're paying. Certainly, the guy whose profit got taken from BitVC is certainly not going to be condoning their business practices for very long.
Sure, and it's nice that you guys reached out, I think, first to the our Bitcoin markets community, which is, it's not just us, it's not just active retail. There are plenty of people there that defend Bitstamp, and they just place a trade every once a month or something like that. So with that being said, whatever is in their consciousness, it may be something where they see your model as much more favorable than a derivative contract like OKCoin's futures, their internal model, not knowing kind of the clearinghouse process. So I will be fair on that end. It's just, like I said, our community is extremely active, as far as Flibbr and I usually only hold trades for probably on the long end 4 to 8 hours. So we're very, fees and those kind of liquidity concerns are paramount.
Sure.
And we kind of breezed over this, but how many employees do you guys have currently at BTC.SX?
Sure, we have 8 people on our team and 2 on our board of advisors. And so, yeah, we have some great talent on board, and we're just very, very passionate about doing what we're doing, just reaching out to the community, just increasing the professionality of what we're doing, and just representing that niche in the market that needs to be filled, really, for Bitcoin as an asset to grow. I guess that's what we're all after.
Yeah,
Yeah,
it's
well,
true.
I think that's something that's really important, and I spoke to OKCoin loads about this before I moved any money over there. And having lost money on Gox, for me, it's all about trustability and accountability. Yeah, so because when I go on your website and I'm using it, like say when I'm using the OKCoin one, I know they've got $16 million worth of funding. I know Draper's chucked money in. I look at the members of the team and I'm reading through and I'm thinking these are serious people, taking it seriously. So I feel like inspired with confidence. But when I go on your site, it says it's not there in the background, but it just wasn't clear to me that what what was going on. You know what I mean? Like is a big funding behind it? Are the big you know what I mean? Like that's what's
Yeah.
important. And how do you build that?
You know what, Flibbr, you've absolutely hit the nail on the head right there. You've presented the holy grail there, and that's a really, really big point to make. The fact that marrying all of the previous discussions from the last half an hour together, you've identified, you've asked me one of the reasons why we charge the fees that we do, and I guess from that perspective, we're going into kind of the tech startup question here, and of how's best to I guess establish a business in the space. And I guess one of the other reasons why we charge the fees that we do is because we're reluctant at this stage to take too much VC backing, because we'd rather be a private company, and we'd rather have our direction not pointed towards us by kind of VC money. And kind of that raises, I guess, a bit of an issue for us in the fact that we have to generate revenue as a business. We can't just offer our service essentially for a very low cost for very little revenue, because we literally don't have 16 million in the bank. We are backed by a little bit of VC money, and we do have a lot of private holdings to ensure that our clients are never out of pocket, which we openly prove to our VCs and accountants all the time. But there lies the question, right? It's like, should a trading platform in this space charge higher fees and expect a VC to cover the cost whilst the business grows, or is it right for the business to be able to charge those fees and kind of grow naturally as a revenue generating business? And that's a very, very difficult question to answer, because there is no right or wrong in this case. There are those companies who are VC backed, who are able to grow very, very quickly, who are able to hire all the top execs from, I guess we've seen a lot of stories out there about Visa and MasterCard execs, Goldman Sachs employees being employed, and I guess to that respect, it comes with that comes with a lot of money and a lot of big name backing. And that in itself is a great way to grow a business, but it certainly puts a lot of pressure on the fact that if the business can't cover the cost of its payroll from month to month, then it's going to be impacted in a pretty major way, i.e. it's literally going to go down.
So how? Go on, Vix.
I was just gonna say, along those same lines, from the trader perspective, first I'll say it's definitely, you brought a lot of philosophical, discussion into that, as far as whether you raise money and kind of figure out your business model later, or what you guys seem to be choosing to do is, be profitable from day one, have a sustainable business model, which I reach out and say I have a tremendous amount of respect for that. But then as a trader, there's a concern of what you have for liquidity. Do you do any proof of reserve system, or something to that effect, that as a trader I can have confidence that even though you don't have tremendous VC backing, that there are that chain of custody, the funds are there?
Yeah, so I mean, a lot of our work in, I guess, in the back end is ensuring that we have full accountability of every single Satoshi which flows through our business 100% of the time in real time. And we do work very, very hard with our accountants to ensure that level of accountability. And it's certainly a level of accountability which we answer to, especially to our VCs. Publicly, we don't do any public proof of reserve systems. However, we will be working towards an audit very, very shortly. So look out for that. Again, because sometimes we just don't announce these things in mainstream media, you might have to find it on our site, but we will publish it on our site, certainly to give our community that reassurance as well.
Yeah, because I was going to say, I never saw anything about this, and like I got onto OKCoin straight away about that. I was like, because that's important, and I think with Bitcoin being the internet of money, you know, it allows you to do it technically, you know, with and automated and all this stuff, and I think it should be.
Sorry, from that respect, I guess I'd just like to clarify the fact that, you know, whenever a trader deposits 1 Bitcoin on our website and places a trade out for 10 Bitcoins, they can literally see those 10 Bitcoins being bought straight off the order book of the other exchange. And I mean, we wouldn't be able to do that if we didn't have the money to do that. And certainly that's one level of basic accountability which you can see that we answer to, the fact that we do have the money and that order is being executed out to market.
And do you, you know, for any like institutional clients that come to you, do you guys offer any like co-location or anything like that? Do they have any packages, or is that all a negotiation?
No, not at this stage.
Okay.
That's not something we've looked into too much. I guess that comes with another whole set of questions about front running, etc.
Yeah, it was a slightly leading question there that I think OKCoin is going to have to answer in the next Hangout as far as what's going on with their order book. But it's something that I think is going to be on the front of you know, Bitcoin discussion, just as it is in Michael Lewis's Flash Boys. So.
Yeah, we all love that book. I mean, if you think of us more as a broker, I guess your question is more well placed, because, you know, what you see when you hit that buy button is us sending an order straight to whoever it is, Bitfinex, Bitstamp, them executing in that order, them giving us back the result, and us telling our client what the result was. So I guess it's kind of like a pass-through broker.
Yeah, you know, now that we've gotten this chance to get to know you guys, and more importantly, what your exchange platform represents, it's making a lot more sense now, where everything fits in with you guys. And yeah, you're right. You basically have an extra level of accountability, because now when the order gets placed and I can see it go across the order book at the exchange, there's never any doubt really that that money isn't there, unless, you know, there's a relationship with you and the exchange that I don't know about. But, you know, there's definitely another level of accountability there.
Yeah.
I definitely just say it's quite a unique offering as well. I don't think anybody else out there is actually offering what you guys offer. I mean, I personally can see good potential in it being used, you know, for manipulation efforts. You know, if you could put over 100 coins, stick it up to 10, and put a 1K wall up, you know, on a real wall on the book, you know, and you stuck 100 coins over and you stuck a load of 10K walls up. Yeah, that would be cool as well. But obviously you can't do limit orders, so. But that's how I would like to use it.
Very clever. I can see where you're going with this. But I guess to that merit, if you think of us more as, I guess the technical term in the space is prime brokerage, as opposed to, you know, a futures trading platform, then you can see the clear differences in what we are and what we're trying to be. I mean, we're not trying to compete against the margin trading platforms or the futures trading platforms. We think they're great products, and we know the guys very, very well. You know, we think their offerings are amazing, which is why we're able to, you know, work with Bitfinex as well, as opposed to work against each other. And I mean, you know, as this space grows, really, as Bitcoin matures, we're going to see a lot more of these kind of alternative investment services, alternative trading platforms pop up here and there. And ultimately, as traders, that's just great for liquidity. It's just great for the market to grow, and certainly it will help accelerate the whole monetary velocity, right? Which is the economics 101 law for growth.
Yeah, absolutely.
Yeah, and just as you were kind of projecting into the future there, you've done probably a pretty good job. I think in my head I have a good idea what your mission statement is, but can you kind of boil it all down to one line and then project into the future where like 6 months from now where you see your space? Because I think to my knowledge you're really the only one doing what I've heard so far. And then, where your company will be in 6 months. Like, what's kind of the vision there?
So I guess the grand vision is to, be a trusted part of Bitcoin's financial services sector. And I guess for the immediate 6 months, I want the company to be laser focused in doing what it's doing, but very, very, very well in a trusted and open and honest way. And perhaps communicating with the community is going to be a big part of that over the next couple of months. But certainly, what I'd love to see is more and more financial services coming to the space, because that's going to really help the sector grow, which is just going to present a huge amount of opportunity for not only us as a company, but for everyone else out there.
Absolutely, yeah.
Yeah. And then we'll see if we have any questions coming in from either TeamSpeak or TradingView, or we'll even go on the panel, which is I think just Jonathan and Matthew, other than me and Flibbr. So let's see.
Do you guys tend to talk much about economic analysis of where you guys foresee Bitcoin going in the next kind of 3 to 6 months? I guess as a trader, you guys must have an opinion on it.
Especially the technical analysis. Flibbr, do you want to talk about that a little bit?
Yeah, I mean, I personally like to use astrology, and
Oh, really?
Yeah, absolutely, absolutely, I do.
He's not trolling either. He's very serious about this, and so am I.
JP Morgan said, he said, millionaires don't use astrology, billionaires do. You know what? It rocks. It rocks.
I did see a post on the Bitcoin Talk forums about this a while ago. Was that to your credit?
No, I do. I have seen that guy doing the posts and stuff, but no, I mean, I do updates in the daily discussion thread sometimes, and I might stick in a little astrological update as well. But generally, the reason why I like it is because all your traditional indicators, MACD, everything is all based on open, high, low, close. So it's all based on what's just happened. So it's always looking into the past, whereas astrology is always looking into the future. Wow. And also traditional technical analysis, I just find is so selective in time frame. Like I saw you guys were talking about the cloud, and I absolutely hate the cloud because I just think you can get any time frame you want. Like my friend, he goes to me, "Oh, look at the 5-minute cloud holding us up." Or he goes, look, we can't go up anymore, the 15-minute cloud. So it's all right, change it to the 17-minute cloud, then you give yourself an extra 20 yuan. So you can just be selective over the time frame to curve fit whatever you want it to say. So, and you can do that with like, you can MACD, it's like, oh, daily turned up. Vic says to me, daily turned up, MACD. And I say, well, so what? The 0.8 day turned up, 3 hours ago. It doesn't matter. So I don't give it much. I like personally horizontal support resistance levels and price action volume and astrological stuff.
Yeah, and I mean Flibbr does definitely use technicals, even though he has a current kick of indicators that he likes. But I mean, you teased us earlier how you would tell us how you turn $2 into 200,000. And since we were just kind of talking about economic analysis and more specifically technical analysis, do you want to elaborate on that at all?
Yeah, happy to share my secrets, although I don't think Flibber's going to like this very much. But perhaps, there's an opportunity in the future for us to promote you as a guest writer for us, guest posts. Our readers would love to read about, your thoughts on your analysis from I guess, looking up to the stars, to the moon. Yeah, the way that I did it was I turned my first $100 initial investment into $20,000 using arbitrage. And so I experimented at the time with triangular arbitrage as well. And what that means is, for those that aren't familiar with arbitrage, is that you're taking a price difference from, say, for example, BTC US dollars, and the price difference between BTC and GBP pounds. And you're trading those price differences against, what Google says the current GBP US dollar exchange rate is. So not only is there the natural arbitrage between two markets, but there's an extra arbitrage opportunity in the fact that the currency prices will present differences throughout the day. And so that was a pretty interesting way of doing arbitrage. But I certainly made the most of my money when I turned $100 into $20,000 into from just classic straight arbitrage. I still think the exchange space is very, very underrepresented. I still think, we still can see the fact that, with a $5 million bear whale order on Bitstamp, those kind of orders will pretty much precede price movements. And so, I mean, there's huge amounts of opportunities out there. Every single day we see arbitrage opportunities. And I'd encourage people to still look into it if they're technically inclined, if they're able to code up bots or systems to do it for them. Because that in itself is a very interesting one. The way I turned $20,000 into $200,000 was through technical analysis. So similar to UVIX, I started questioning to myself, why am I just trading in and out on an exchange, on a number of exchanges, because they're A, hugely unreliable, B, they just go down. And even before Mt. Gox went down, there are certainly 3 or 4 exchanges that set up shop, essentially by children, kids, young entrepreneurs that didn't have that prior financial services experience, and they just went down left, right, and center. And so, I mean, during those times, there were huge opportunities because there were huge price differences. But I guess that was it for me. I guess my profit would have been easily double that if I didn't post those losses. And so when I switched my bot to do technical analysis trading, I literally picked the most simple analysis that was out there and back tested it, which was moving average crossovers. And again, Flibbr, you're not going to like this, but even though it analyzes past data, I guess I had a theory in my own head that stated that Bitcoin is very, at the time especially, it was very influenced by kind of mainstream media and fear and greed hypes. Fear and greed cycles. And so understanding that Bitcoin, certainly at that stage, was very cyclic, all you would have to do is literally smooth out the price movements, and that's what moving averages are great at doing, smoothing out price movements. So when the price would cross over a slow moving average, you'd know that there'll be a downward correction, even though there's an ultimate trend upwards. And that's all I did. I just entered. I believe at the time it was, when I initially started, it was $1,000 positions at a time, buy, sell, $1,000 lots, and then I just upped the ante and eventually started doing $10,000 lots, buy, sell, under my same technical analysis moving average scripts. And I believe even still today, if you get your execution right, I looked at this briefly 2 months ago out of curiosity, and I believe I still would have posted profits if I ran that bot today, which I don't do.
Well, and to be fair to Flibbr, if he posts any of his charts from TradingView, I think I feel like he's a pretty good technician. He's just articulating some of the astrology stuff we talk about right now. I'll let him speak for himself if he wants to.
I think that's pretty cool. I'd love to be able to share that with our community.
And with that being said, the current format that I tend to see is very blog orientated, and it's condensed, and I think it works very well for somebody that maybe wants to read about Bitcoin technical analysis on a daily basis or something to that effect. And it's a good introduction for people that are curious. And just what Flibbr and I and the rest of the community on TeamSpeak, which is just the Bitcoin trader Squawk box that we have, is really just, looking at price action. We do a lot of charting. There is no organization at all, and that's kind of what we love, because it's just very organic growth. So that it provides a different platform because it's all audio based. I think sometimes, whether it be the IRC chat or the TradingView chat, you just get your eyes get tired because you're staring at charts all day, and now you're trying to filter through some of the TradingView or the IRC chat, especially TradingView. I mean, there's some good charts on there. There's some people that make some strong points, but like anything, there's a lot of noise with it too. But I'm happy with the noise because I feel like I get a much more raw look at what's going on in the market, like that very raw emotion that you were talking about earlier.
The fearing read cycles.
Yeah. I did pull one other question off of the TeamSpeak. It says, what are you doing to gain traction to your exchange?
Traction in terms of more business to our
Yeah.
site?
Yeah.
Oh, wow, that's an interesting question that I didn't expect. I guess a lot of our traction comes pretty naturally. Yeah, I can't really say more than that. Just we get a lot of recommendations, word of mouth, really, and we're at the conferences quite a lot, talking to our customers, and they like to see it. They like to know that there are real people that are really accountable for their activities behind what they do, which I love to do.
I think, did I see you at that conference on the one, the one with the tiny sofa? Were you at that conference?
Oh, yeah, it was actually. That was Coin Summit, was it?
Yeah, in London.
I think everyone was tweeting that the sofa was too small and they couldn't afford a big enough sofa, and as quick as people were tweeting them, they couldn't take it off the big screen. And so it just looks like a horrible nightmare for them.
Were you on the stage on that though? Was that you guys?
No, I wasn't sitting on the tiny sofa. I was sitting with Arthur from BitMEX.
Yeah.
And who I'm also very good friends with. Is a great guy. He just launched his futures platform as well, which I highly recommend. And I believe we were being questioned by John Matonis.
Yeah, that is it. I definitely remember now because that was when I first kind of saw about you guys and first kind of raised my interest really. I mean, before that, all I knew was that you were using the leverage trading with Mt. Gox, and since Gox had gone, I hadn't heard much more since then. So
yeah, we're still around, going strong.
And yeah, just to kind of start to close it down here. Now, we do have a couple panel members. I'll see if they have a mic. Jonathan, do you have your mic on? Jonathan? You might be just listening.
He's on mute, I think.
I do. No questions at this time, Vix.
All right. Well, thanks for chiming in. And Matthew, do you have any questions? I guess Matthew going once? Okay. All right, Flibbr, I'll give you just our kind of closing remarks if you want to go ahead.
Well, I'd just like to say, thanks for joining us in this hangout. I appreciate it. I like to hear you guys, and I especially like putting forward all the questions as to, what I thought of you guys and my first impressions, and you've given some good responses, and I think people out there will hopefully gain a new insight and look into just what you're offering. So, good stuff.
And
thanks
go ahead.
for taking time to give us feedback. I've been quietly taking notes, and it's not something we're gonna forget about 10 minutes later. It's something that we will act upon.
Thank you. And then Joe, you'll give us some closing remarks of you have. We got 17 viewers. This will be replayed on my YouTube channel. There's a couple other people that'll probably listen in. What do you have to say to them for your exchange and just going forward as we close it down here?
I guess from that respect, firstly, I'd like to thank you for inviting us on the show. I think what you're doing with the community is great, and I'd like to end with the fact that, we're always working on improving our our trading platform. So I mean, if there are any suggestions, feel free to just send us an email. And we're very, very proactive on the support side, which is the kind of accountability which I feel this industry really, really needs. You know, really proactive support. You know, you can speak with your voice, and we think that's a very, very powerful mechanism for being heard. And we certainly like to answer questions which are fielded our way. But what you should look out for, I guess, in the immediate future, especially as you're looking for your trading signals as well, is just generally how the market matures. And I mean, you can see that very, very transparently through the way that not only we, but the other futures platforms and trading platforms operate their business and grow as well. And I think that'll be very, very telling as to where the market's going to go next. And so, yeah, thank you very much for your time. Thank you very much for listening. And hope to be part of the show in the future.
Can we find you on Twitter? Are you on Twitter?
Absolutely. I tend to tweet quite a lot on BTC.SX, and tweet Joe Lee is my personal Twitter.
Joe Lee. All right, I'll put that in the show notes. It's just what I'm writing it down right now. What was there? There's something else I was going to write about here. Co-location.
Yes, I'd be quite interested to hear what your sentiment is currently as the show closes.
Oh, incredibly bullish. Incredibly bullish. I mean, from an astrological standpoint, you know, because that's basically my underlying basis is that dictates what we're going to do overall, and the TAs fills in the gaps. And we're actually in a down moon cycle, so we're in a negative, like positive energy moon, but we're not really tanking that hard, making new lows. In fact, we're making higher lows, higher highs. So this is great, and when the cycle changes into an up moon cycle, this is just going to be really good. And the fact that we got that 2-hour Bollinger Band squeeze yesterday, and I noticed a seller on Finex, he tanked it down, and yeah, we tanked down on it, but we only tanked down $4, and after that $4, you know, we've retraced at more than 100%. So to pull back from that Bollinger Band squeeze and go back higher, incredibly strong. I just took a link in the chart as well to Imgur, to some of my current favorite astrological charts that I'm using, in case you want to have a look.
But what about you, Joe? What's your sentiment?
I'm hoping for a big bull run here. I certainly like to see the price go up along with the rest of the industry. But yeah, I guess what we've been seeing lately is a lot of downward pressure, and it's been very, very slow declines, because I like to take the bigger picture from, you know, I guess at least a 12-month view. What we've seen from, you know, this time last year from the highs of 1,400 is just a very, very slow and steady decline, and at some point, I believe the sentiment towards Bitcoin and mainstream media is just gonna switch again. I think it's incredibly bearish, or it's been incredibly bearish over the course of the year. And yeah, I'm hoping for a good start to the new year.
Yeah, and I was just gonna mention, you know, with the TeamSpeak, we do have Philip from Bitfinex there, and you know, although he didn't have to make it known that he was from Bitfinex, he was just a silent observer for the most part, and he started speaking. And, you know, we can tell, you know, what he said is, you know, he's just a trader that got bit by the bug, and once you get bit by the trading bug, there is no cure. So, you know, it's the support group, you know, like the Fight Club support group of the T channel. So if you guys ever do, you know, make it over there, and whether you want to just remain silent and listen, you know, passively, or if you want to engage or make it known that who you are, it's all up to you. So I'll just extend that invitation to close it out.
Oh, we'd love to. Well, I'll make a point of that, and you'll expect to see me on very soon.
All right. Thanks, guys. I'm just going to stop the broadcast now.